So today I'm going to show you the two best countries that you can have as your personal tax residency if you are a digital nomad. This means that you're traveling country to country. You're not really settling down in any one country. So in an ideal world, before we go to these countries, you have a company through which you funnel your income because of the limitation of liability. If you have a company, then you can't be sued personally. Your personal assets are protected. That's the limitation of liability. And ideally, when we do get paid, we want this company to pay 0% tax. And then when we take out that money, we also want to pay 0% tax personally. That's the ideal goal. It's not always possible, but this is what we're trying to recreate, right? So the first step is we set up the vehicle, that vehicle that we said was going to pay 0% tax. And we find this vehicle in the US LLC. The US LLC is taxed by transparency, that's what it's called, so it has no corporation tax. So normally a company would have its own revenue, would have its own costs, the difference is the profit, like Tesla has its own profit, and then the company would pay tax on its own profits with its own money. It's not Elon Musk that pays Tesla's taxes, right? It's Tesla that pays its own tax, and then when he wants to take out money, then he has to pay income tax personally. So this US company instead, they go like, okay, we don't tax you on a corporate level, all the profits just flow straight down to you, and then you pay tax based on where you're a tax resident. So this corporation tax basically goes to zero. You've got limitation of liability, provided you don't use your company for personal expenses. I'm watching you, I know some of you do that shit. And it pays no corporation tax. All income you received is taxed based on where you're a tax resident of. And then we need to take care of this income tax. So we get out of the Swedish tax system. This is an example. This could be any tax system in the world that you're in right now. And we get into a territorial tax system. Now, territorial countries only tax you on money you make inside of their country, that's sourced inside of the country. But if the money's coming from a foreign company, that money's not taxed, right? Territorial taxation, you're only taxed on locally sourced income. So for example, if you have like a coffee shop in that place, if you got like clients, if you are running the operations from that country, right? But if you're not, then you're not taxed. So you get into this country, you pay no tax because all the profits come from abroad. Happy days, no tax. Now, is this possible? With option number one, it is. But let me walk you through it. You've probably heard a lot about Paraguay. This is how it works. So again, you have the LLC. The LLC pays no tax because it's a pass-through entity. The LLC does not tax you. All the profits flow straight down to you. But because these profits are not sourced from Paraguay, you also pay 0% tax. This is like the dream, right? You can travel the world, pay 0% tax. The pros of this is, in fact, 0% tax. No physical presence required, which is crazy, but Paraguay doesn't need you to actually be in Paraguay. There are minimal filing requirements. Works well if you're not making that much money just yet. And it's cool because whereas with a lot of countries you need to spend 6 months there, you need to have like ties and all this stuff. Paraguay literally just says, if you have, you can get permanent residency very easy. With that, you can apply for a tax number. And once you have that tax number, you need to file monthly VAT returns, even if they're nil, right? Because you're not doing any business in Paraguay. You'll file monthly VAT returns, and that will be enough for Paraguay to recognize you as a tax resident of Paraguay. Happy days. Again, no tax, no physical presence required, and it works well if you don't spend much time in Europe. Now, why? I will get to it in a minute. The cons is that it might not work. And if you spend a lot of time in Europe, so 6 months plus, Italy, Sweden, whatever country we're talking about, actually cooperates with the rest of the EU to attribute taxing rights. So let me explain this well. If in your 12 months in the calendar year, you spend 9 months in Europe and 3 months outside of the EU, what happens is that the EU, the European countries, actually cooperate to attribute taxing rights. So what does this mean? If you're an Italian or a Swede, let's go Italian. If you're an Italian and you spend 3 months in Italy, you're like, oh, but I'm not spending a lot of time in Italy. But then you spend 3 months in France, 3 months in Spain, and then maybe 3 months in Thailand, right? Or 3 months in South Africa, in Brazil, wherever you want to go. The problem with that is that there are no borders, if you think about it. Like, you can literally drive from Italy to France. If you spend 9 months in Europe and someone actually comes and check, like some Italian tax authorities come and looks at your Paraguay tax residency and sees that you've spent 9 months in Europe, they're actually going to cooperate between each other. Italy, France, and Spain, or wherever I said you spent in Europe, and they're going to be like, hey, this guy's not paid taxes anyway. He spent 9 months in Europe. We want to tax him. Are you okay with it? And what happens then is that the other countries will go like, yeah, of course you can tax him. He spent 3 months here. here, but we understand that he's an Italian citizen. He pays his taxes in Italy, right? If he doesn't pay them anywhere else. So this is an issue. Whereas it works well if you don't spend a lot of time in Europe, because if you don't spend a lot of time in Europe, if you spend, say, 3 months in Thailand, 3 months in Brazil, 3 months in South Africa, and only like 3 months in Italy, you know, or even like split Italy, France, whatever, the corporation is not automatic. So Italy only has those like 3 months in Europe. And then if you successfully cut your ties from Italy, you know, you don't really use an Italian bank anymore, you don't own anything and all this stuff, then this might actually work as an option. So these are the pros and the cons. Look at it, weigh them out. I recommend Paraguay if you're not planning on spending more than 5 months in Europe. Like if you're traveling Southeast Asia, go for Paraguay. If you're traveling South America, most importantly, go for Paraguay. If you travel Southeast Asia, there's a lot of Southeast Asian places, you know, you might want to go to before choosing Paraguay. But if you're spending a lot of time in Europe, then I would go to option number 2. So here I'm just showing you the tax that you're paying. You're not paying any. Well, happy days. If you're spending a lot of time in Europe, I suggest Cyprus. Cyprus is another country that has very low taxes. It doesn't have zero. Obviously here I've put the LLC as intermediary because maybe you've got American clients, you know, maybe you like to invoice in other currencies. But this is the same. It pays no corporation tax. But then the Cyprus company pays 12.5% tax. But then because you'd make use of like non-domicile status, you actually pay 0% tax when you take out the money again. So basically there's a one-off taxation of 12.5%. Pros, 12.5% tax, 0% capital gains will actually work like 100% because it's, you know, it's proven and other European countries actually recognize this. You can travel around Europe as much as you want. You can spend up to 5 months in Sweden, you know, in Italy and in your home country, whatever this is. You actually got Cyprus healthcare because a lot of the problems that, you know, people talk about is, oh, but if I get out my tax system, I won't have healthcare. Like if you relocate to Cyprus, you can most definitely apply for healthcare in Cyprus, completely free, like most European countries. And it works long term. You know, if you actually want to settle down, you know, eventually, it still works. It's still a solid residency. Paraguay, it's more a temporary one. Like if you're making $1 million a year, Paraguay is not it. Unless you live there, don't go to Paraguay. But the cons are you actually need to spend 60 days in Cyprus. And again, like this is a con, but not that much of a con. Like I understand digital nomads, it's like I want to be wherever I want and I don't want to pay taxes. That's the dream, right? Well, it's not possible. Or it is with Paraguay, very few circumstances, not always, right? But this is, if you've got more money, like you need to actually spend 60 days in Cyprus, and that's not the problem. The problem is you need to have a place out, like you need to rent out a place for 12 months. Like you need to have a place, a house. Your main base needs to be in Cyprus. And obviously, if you're only spending 60 days, then it means this house is like, you're renting it out, but you're not actually using it. So you're kind of losing money, using money. It depends how much money you're making. A lot of times it might still be worth it because 12.5% is a lot better than, you know, the 50% that you may be paying back home if you're in Italy, if you're in Sweden, if you're in Spain. It's a longer setup process. It costs more. You know, you need to be careful with your expenses because there actually is taxation. Like you need to be careful. You can't just write off whatever you want like you could with Paraguay. I mean, you still shouldn't, but at least it's, they're more lenient. Like here, they're actually going to check that, you know, all the expenses are business expenses. There's lots of filing requirements. It's a bit annoying, but this is stuff that your accountant will take care of anyways. You might not even need the US company, depending on where your clients are. Like you might not even need this. You can just go straight to the company. This is just an extra layer. But this is Cyprus, and this is the taxation. Based on your income, people who watch me generally have anywhere from 10K a month to 100K a month. People who work with me, this is the amount of tax that you'd have to pay. In Cyprus, it's just literally 12.5% of everything you make, and that's it. And option number 3, again, I did this from one of my Swedish clients, is your home country. Now, maybe your home country is not Sweden, maybe your home country is Italy, maybe it's Spain, maybe it's France. I know there's quite a few French people who watch me, interestingly enough. But taxation is going to be very similar. So again, 0% tax on the company, the US company, because it's taxed by transparency. 20% corporation tax, and again, this can be higher based on the country. And then when you take out money, you have to pay, in Sweden, 30%. It adds up to about 50%, like all in all. It's going to be very similar, regardless of where you're from. Pros, full freedom. You can actually stay in any country you want for however long you want. Obviously less than 6 months, because then you have to pay taxes in the new country. It will also work 100%, and you've got full Swedish, Italian, Spanish, whatever, wherever you're from, that country's healthcare completely for free. The cons is just the taxes. Cons is just you pay crazy high taxes, literally 6 figures a year. And I guess that's the reason why you're watching this video. You know, if this pain is high enough, like if this con is like a con enough, then you're going to be one to exploring the other two options. Obviously banking in Swedish crowns, like if you're from Sweden and you're not, that it's not a country with euros, it might be a problem, but that's, you know, you can have the LLC as intermediary to be able to like bank in dollars and charge in dollars and in euros and in pounds. So like that's not really an issue. But like this is the pro. If you actually just genuinely don't care and you were like, I want to spend as much time as I want in my home country, then just do it and pay the taxes. But this is how much you're paying. So this is like the comparison. I've got a slide with comparisons here. And as you can see, the more money you make, the more this becomes painful, because like 10K a month, with 10K a month, you're still, you're still low-key cooked, right? You're still paying 35K extra, but like when you start hitting these 30K, 50K, even going towards 100K, like it's over $250,000 in taxes that you could be saving just by having a place in Cyprus for 12 months and spending 60 days there. Obviously, you're not going to be able to spend 6 months in Sweden, but even if you spend like 4 or 5 months in Sweden, 2 months in Cyprus, the rest you travel, it's not an issue. Like this works. Obviously, it's a cost-benefit analysis. The thing I love about, you know, selling these services is that it's not like, oh, emotion and how do you feel? It's like, no, if the maths makes sense, if you're saving more money by doing this, then just do it. Obviously Paraguay is 0, but I've mentioned the discrepancies. I've mentioned when I would do it, when I wouldn't do it. So those are the two options. And for Europeans, this is my recommended structure. If you're European, if you're traveling Europe, get a Cyprus company, settle down in Cyprus. Yes, it's more expensive. Yes, it doesn't have 0% tax, but you'll be safe 100%. And it works long term. Like if you're planning on scaling past like $1 million a year, 10 million a year, Paraguay is not going to work. It's not going to hold. You're going to get audited. People are going to look at it and it's not going to hold. Like our goal is to actually build something that works, even if some tax officer comes and looks at it. Because like, of course, you know, if no one looks at it, then you can get away with it. But of course, like you can also get away with murder if no one finds out, right? It's a weird analogy. Didn't think you were going to use this in a tax video, but it's true. So you want something that holds even if the tax authorities check, and this it is. This works. Paraguay, it also works. Like, look, there's a lot of people that promote it, and they promote it for a reason. But I recommend this if you're not European. Like, if you don't plan on spending any time in Europe, and you need to make sure that you're out of your tax system. Like, make sure you're using Paraguayan banking, or, you know, banking in a different country. Like, stop using your home country's bank accounts. Like, don't, make sure you don't own anything in your home country. Make sure you don't spend too much time in your home country. Be careful. It's a nice like transition tax residency, but don't abuse it, because it'll come back and bite you in the ass. So if you're an online entrepreneur looking to learn more about taxes, you can click the first link in the description that says 0% tax masterclass. That's completely free. You can click the first link there. Or if you just want my personal advice tailored to your individual situation, you can click the second link in the description. That's a 45-minute consultation call. You can just talk straight with me, 45 minutes straight. We'll address all your issues, all your questions, and try to solve all your problems. Thanks for watching. Bye-bye.